Alright, so welcome to the Diary of a Trader video. I'm going to be talking to you guys about market profile. I know for a lot of you guys, you might be used to volume profile. So you've seen that online and, you've been trying to do trades with it and so on. But market profile, this is the complete thing that you need. Now, whilst a lot of traders, even I do that sometimes with Sierra charts because you can actually build in composite profiles. However, the version of this that I had built out for MetaTrader doesn't really have that. But I actually like to visualize it on MetaTrader, not only because this tool is quite simple. Also, the feeds out of MetaTrader for some reason seem to be a little bit better than with other platforms. Even though I'm getting a lot of my feed from the exchange, I still find that seeing the spot market is quite essential. So I prefer to use MetaTrader, right? And it's also quite a simple platform in a way. So it's not complicated. Everyone can see what's going on. So this is a profile of crude oil. So just to give you guys an idea of what you're seeing. So you're looking at a profile of crude oil. And, for me, I call the profile $1 million trading system, right? Because, if you want to do well in trading, you want to kind of up your game, you need to be looking at the profile. Now, foolish to tell you that I almost exclusively trade with the profile. I do build structure, right, which can be quite hard to see on a profile unless you zoomed out like really fine, and then it will look more like a candlestick chart. Now, why do I use the profile? What's the difference? What makes this better than other type systems? And I think this is where we come down to the crux of it. And there are a couple of things, right? So first, I'm going to tell you what's on a profile, so you kind of know what you're looking at. Now, with a profile, if you split that profile, you very quickly realize that it's almost very similar to a candlestick chart in that the letters represent a rotation period, right? So in this case, you're looking at 4-hour rotation. So each letter represents 4 hours open to close. Now, if I zoom in a little bit, right? Let's zoom in. You'll be able to see some dots. So you got an open, a closed dot, and then we opened here, closed dot, and so on, right? So that tells you where each period is opening and closing, and you can see that dot down here to represent current price action, right? So you can zoom in closer. Now, I prefer to keep my profile out so I get a more bird's eye, I would say, view to what's going on. Now, of course, in my live room today, I was covering what I thought of crude, what I thought would go, and I was earmarking us to go through value in the 72.37, 72.39 type area. Now, before I jump into that, let me just go back to what I was talking about. So here we can see on the profile, if we split it, that's the rotations. When we unsplit it, right? So if we split it and then unsplit it, it will give you the horizontal view, which is what you would generally see. So if you ever been in a futures proprietary trading firm, or you've been in any kind of institution, maybe a bank, for example, you would see traders with a market profile on their screens, right? So for those of you who don't know, platforms like CQG, for example, have it built in. Most of the big firms would use CQG. I believe Bloomberg has it built in up somewhere. I'm not sure. For guys who use the terminals, let me know. It wasn't available when I knew anything about terminals, so I'm not really sure, but I believe they have it built in. Sierra charts, definitely, Window Trader, and a few of the other platforms that you would find larger traders using, just because the environment they were in, that's kind of what they used. You're not going to find too many big traders using MetaTrader, just because CQG is just a better built platform. You can do a lot more stuff with it, as is Sierra charts. So some of those platforms have it based on the merit of the kind of platforms they are. Again, what we see in here is the opening price, and then we can obviously see current price, which would also represent the closing price when this weekly profile finally closes down at the end of the week. So this allows us to visualize the market in real time. So it's a bit dynamic, right? So if I want to make say for example, when we were trading lower, so we were breaking what we would call the initial balance. So this bar here is the representation of an initial balance. Again, I do have a program on Market Profile where I take you through step by step what all of these things mean and how you trade it. But the initial balance is that first hour of trading. But in the case of a weekly profile, we have to set the initial balance to suit what our benchmark is for the week. Now, the first thing you notice is as we break the initial balance, then we start to experience a lot more flow. And this is the case for most weeks as we go through it. You start to look for opportunities. So for example, we're cutting through it and we're trading through 1, 2, 3, 4, 5 weeks worth of value. And as you can see, we're trading this value area. We do have a bit of a bid stack here, but my expectations is that we approach this lower side of value, we might start to see some buying. Now, of course, with commodities, they can go really hard and fast. So the other thing we always take into account is the true range or the range of the asset. So we want to pay attention to that. So again, you know, historically, price action wise, even when we look at the biggest ranges, the chances that we're going to cut below this week's low, which is 68.87, is quite slim. Now, structurally, if you do a structural chart of crude oil, it's actually quite bearish on the long term, but we expecting some short-term rallies at the very least. So again, because of that, we're not going to be entirely bearish. If we were going to get bearish, it was really good to get bearish at these highs. Various reasons for that. Obviously, most importantly, we traded value high, cut through, and then start to take the initial balance 2 weeks down the line. So this immediately gives you an indication that if you're going to get short that week, you'd want to be short at 80.48, and then you look to portion risk against the profile itself. There are a couple of ways you can do this. You can look for the high of the week, for example, and so on. Now, whilst these look like bigger positions, if we put it in a perspective, right, obviously you can position size based on the capital you have, but this was 2.5 points in crude, right? So it's $1,000 a point, so that's $2,500 on one contract of crude, right? And if you obviously you can do a mini, which will be less, or you can do a micro, right, which will be even less, right? So again, it could be anywhere from $1,250, you know, for that whole position to $250 to $2,500, depending on the crude contract that you're trading. Right. So again, if we take the same mindset and let's say you were short on the balance break, again, crude has already moved 7 points in about 2 weeks, right, including this week, right? So if we take the position, that's 2 weeks, this week, 3 weeks, in counting. So really over the past 2 weeks, it's moved about 6.5 points, and now it's moving 7 points, right? Remember, your risk on this trade was 2.5 points, right? So if we can sort of test these lows, which is near enough 8 points, then you should be looking to cover. And I would assume a lot of traders will look to cover. This market has been too short for a while, and as a consequence, we'll look to cover at value low. So this is just kind of a synopsis, right, of why it's easier to trade with the profile. Now, of course, on the break here, it's tempting to get short, and with the flow that we're seeing, it's arguable that, well, what if we get another drop to the downside? Well, yeah, what if? But trade location wise, it isn't very good. And that's one of the things as a market profile, pupil, student, trader, one of the things that you will learn is that you want to be always trading from good trade locations, right? So you don't want to be trading into the downside. You want to be trading just as we're coming from the upside, right? So, you know, a lot of traders will probably trade it. So they will go short into the highs. I prefer to wait for that reaction, see us break down and see it play out on the weekly profile. Something significant like an initial balance break, for example, or a trade through value, for example. So these are all really good concepts, or maybe we hit an offer stack and then we bounce out of that. So these are all things that I'm looking for before I act. So I can also see principally there's a lot of liquidity at prior week highs, right? So if we count backwards, these are a few weeks, right? So we've just tested some new highs and then we're backing out of those new highs. It tells us that there's probably a very big liquidity hunt here, and it makes sense to be short with that move to the downside. So a good trade location tends to count. And if you can sort of combine that with, you know, good macro market structure, then you can have a really good bias. So for example, if crude oil was bearish on the macro market structure, then you'd want to be looking for rallies to short in. So when you see moves like this, you would pretty much take those to the downside, right? So again, that's important. So these are some, and of course we have things like the point of control, which give us an idea where the a lot of the price action kind of centered. For me, I try to look at it more like a fair price, and I believe that all the point of controls need to be traded out. So for example, as we're going lower, we can see that we haven't traded the 8084 or the 7729 point of control. So there's a chance that when we bounce, this becomes good targeting areas for where we're going to be next, providing this is a trend upwards, right? So again, if we hit a low and then we start to buy up, then I would start to target the fair point of control in order to get into the trade. Now again, why do I trade this way? Why do we have to look at this concept? Well, you can see that here. We can see that point of control here, it was traded out, fair prices. We bounced up, it traded out again, fair prices. We went higher and we came close, but we didn't quite trade it, descended, but then we came back to trade it. So again, when you're seeing naked, what we call a naked point of control, that's what we want to aim for. So say for example, we were down this week quite heavily, and then we started to build, and then we started to see initial balance breaks. Well, then we can clearly see that we had a naked here, right? We had a naked here for sure. So as we pulled up, this would have been a likely target, and then we could start to protect that position. Eventually, we came really close that week, and then we broke back out again and then started lower. Right, so targeting the untraded fair prices is always a good way to kind of position yourself. Well, naturally, I wouldn't have stayed in like the trade for 1, 2, 3, 4, 5 weeks to hit the fair point of control, or the fair price and the naked point of control. I would have probably said, well, look, we went up, we traded really close, we were prior week's highs. That's a good place to take profit, really, based on from a risk reward standpoint, right? Let's say even I stayed in for an additional week, we hit the lows, we bounced. Eventually, we did go quite close up there. I would have looked to cover just because of the way we were setting up now, right? So this is clearly an offer stack. I might not wait for it. We're trading the underside in G period. I would have looked to cut at the week's high, right? Because I've been in the trade too long. This is what we call cash flow erosion. We're locking up capital for a long period of time, and we're not getting a very quick result. With some of these assets, when they move really quickly, and we need to see that. You can tell from looking at the chart of crude, when we hit a good bottom, within about 1, 2, and 3 weeks, we had pretty much traded back up again, right? So we don't want to more or less neglect that fact that these assets need to move very quickly. Obviously, we're seeing that with crude oil now. We're going incredibly lower and we're moving very fast. So my expectations are by the time we get to Thursday and Friday, we should have found a relative bottom that we can look to maybe play this back to the upside. And what are we looking at? You know, there are a lot of fair prices here to chase, and that's kind of what we want to pay attention to, right? Equally here, we can see that drop on the S&P. We're trading into bid stacks as well. So again, we're probably expecting a bounce. So back to crude oil. So yeah, so that's kind of, for me anyway, that's kind of how I look at the market from a perspective point of view. And that's something we need to have, even when we are, you know, when the market's going against us, we still need that perspective. And that's the importance of risk management and so on. So guys, I hope you enjoyed this video covering market profile. I think it's important for me. It's $1 million trading tool just because it's the best way to succeed. And if you have the capital, you know, to make $1 million, I'm pretty sure that you would make $1 million using the profile. It's just simply because it gives you everything clearly, like graphically, everything's quite clear. You don't have to, you have a naked chart. There's no indicators on here, nothing to kind of confuse you. The only thing I have at the bottom here is my volume, which gives me an idea, but largely I'm looking at the price action. I can tell you what's going to happen. I know exactly where I want to enter. If I'm late in a trade, I know exactly when to sit out. And, you know, again, just this short session, I've already set myself some benchmarks in terms of what I want to see. And I'm kind of reacting to the state of the market, the way things are now, rather than trying to make up my own ideas or try and force my ideas on the market. So I can actually see this dynamically in real time, and then I can make a pretty decent call. Hopefully you enjoyed this video. Don't forget to like, subscribe as well to the channel. It will help the channel grow. I do intend to be doing a lot of these videos so you guys can build a really good understanding about market profile. I don't see a lot of profile videos on YouTube, which I think is one of the key institutional ways to trade. They're just not available. So guys, till my next video, adios.